Hello again, everybody. Doing here from DRFX for swing trading. Taking a look at the pound US dollar that has given us a very sharp bearish move in favor of the US dollar, which could basically define the movement of this pair over the next couple of weeks. Now, as you can see here, we're in a situation in which the pair formed a pennant consolidation formation on the daily chart. Resistance boundary being formed at this 56.59 area and connecting it with the 54.97 area. So the support and resistance boundaries have basically been completed, and we now have a situation in which the market is now breaking below this support point. Now, consolidation formations such as that one on the pound US dollar is very common across the currency market. You will either have setups such as ranges or pennants, and ranges and pennants basically fall into the category of consolidation formations. So with these formations, the market will produce waves of uptrends and downtrends that eventually lead to the formation of the consolidation. And you can trade within these boundaries between support and resistance until the breakout takes place. And once the breakout takes place, then you can take advantage of the movement, which is normally expected to be sharp and provide several hundred pips in potential profit. Now, with respect to consolidation breakouts, there are two situations that we could find. The market could either reverse and take us back inside of the consolidation, or it will continue to break out in the indicated direction. Now, given the distance by which it has broken this support boundary, the more likely scenario right now is for the market to continue bearish. It will either continue doing this by initially pulling back and testing the broken support boundary, and then U-turning to produce another bearish signal, or it could simply continue in the direction indicated by the current breakout signal without this pullback. So we could have a situation in which the market just continues with continuous and additional bearish signals and bearish candles. So those are the two ways in which the market could continue with this breakout. As I said before, it is possible for the market to reverse and take us back inside of the consolidation, but given the distance by which this has already broken the support boundary, focusing on the bearish scenario is the better choice right now. Now, let us, for the time being, assume that the market is going to continue in the bearish direction below the support boundary. The next step would be to identify whether the candlestick signals that we see on the daily chart are strong enough to justify the trade. The step involved in doing this is to basically fill up the trade sheet and ensure that the criteria to justify trading these types of setups are met. So we're going to wait to see if when the market closes, if the signals that we see on the daily chart as well as on a 4-hour chart conform to the parameters and the criteria that we have in our trade sheet. Once that is done, and once we can confidently say that the trade can be taken, the next thing to do is to fill out the trade entry sheet form with the relevant price information, stop loss and limit order, and then identify and determine how long we're going to hold the trade for. And this holding period is going to be dependent on the type of trade that we see. So with consolidation breakouts, the holding period generally is 7 days, but that is going to be dependent on other factors that could present themselves after the daily chart has presented its signal. So in summary, this bearish move was always going to be expected, because yesterday the market presented us with this strong bearish candle. So having formed this resistance boundary, it was always expected to head to the support boundary. And as we're now seeing here, not only has it reached the support boundary, but it is now looking as if we're going to be continuing bearish in favor of the US dollar to start a sharp breakout from this pennant. So we're going to wait to see what the market presents in terms of a trading opportunity, and as long as it conforms to the rules that we set up set out for this type of trading opportunity, then we should be able to capture several hundred pips. So until then, take care.